Welcome back to Investing Talk Podcast. We're going to be looking at CoreWeave today. Um, you sent us, wow, you really sent us a lot this time. You sent us all this stuff about what they do, the recent performance, their financials, potential red flags, advantages, how the market feels about them, where they stand compared to other companies, and even what the future might look like, along with some early technical and stock analysis since their IPO. So our mission today is, all right, okay, so first things first, let's break down exactly what CoreWeave does. At their core, they are a cloud computing company, but with a very particular focus on high-performance computing that really relies on those GPUs. Think of the heavy lifting involved in things like training AI models, machine learning algorithms, those incredible visual effects you see in movies, complex computational biology research, and even processing blockchain transactions. What gives them their edge is their specialized hardware, primarily those NVIDIA GPUs and their very intelligent software that's designed to make everything run as efficiently and as quickly as possible.
They're not just about storing files online.
No, not at all. And if we take a step back and look at the bigger picture here, this huge growth in AI and machine learning applications, just means an enormous demand for processing power. And GPUs are really well suited for these kinds of parallel processing tasks, which speeds things up significantly. And CoreWeave has positioned themselves very deliberately to provide that absolutely essential infrastructure.
Exactly. CoreWeave is all about giving the power to those who need it most.
Now, you mentioned that CoreWeave just went public with an IPO. And this is a really big deal, so let's dive into the specifics. Initially, they had planned to offer shares between $47 and $55. But ultimately, the IPO was priced at $40 per share. When it started trading on the Nasdaq Q under the ticker CRWV, the stock opened a little bit lower at $39, but managed to close that first day right at $40. And you also mentioned that they originally planned to sell 49 million shares, but ended up selling 37.5 million, which raised $1.5 billion. That makes it the largest U.S. tech IPO since September of last year. During that very first day of trading, the stock price fluctuated, going between about $37.50 and nearly $42. This shows us how the market is beginning to react to their debut and their shift from cryptocurrency mining over to cloud infrastructure. Kind of a wild ride, wouldn't you say?
Oh, absolutely. I think the fact that the pricing ended up being lower than that initial range and they offered fewer shares than they had planned could indicate a couple of things. Maybe it reflects a more cautious approach from the company, considering what the market is doing right now. Or it's possible that investor interest wasn't quite as high as they initially thought it would be. And the fact that the price bounced around so much on that first day is pretty typical when a new stock gets listed, as the market kind of tries to figure out what it's worth.
Yeah, absolutely. Makes sense. Okay, so let's shift gears now and talk about CoreWeave's financial health. You mentioned that they're currently operating at a net loss, which you said isn't unusual for tech companies that are really focused on fast growth. Can you explain why that might be and what else their financials are telling us?
Yeah, so a really important thing to remember with a lot of these high growth tech companies is that they're often putting their focus on expanding as quickly as they can. That means investing a lot of money up front in things like building out their infrastructure, research, development, and attracting new customers. All of that can lead to them operating at a loss in the beginning. However, the information you sent does show that CoreWeave has some pretty substantial revenue growth, which is being fueled by that really strong demand we talked about for AI and machine learning capabilities. And we also see that their gross profit margins have actually been getting better, which is a good sign that their operations are becoming more efficient as they grow.
Right. You also brought up some potential challenges and also advantages. Let's start by digging into those potential challenges. The first one you mentioned is their governance structure, specifically their three-tier share class system. So why could this be a cause for concern for those public shareholders?
Well, it really gets at the heart of who has control within the company. A system like that, with three tiers of shares, usually means that different shareholders have varying degrees of voting power. It's not uncommon for founders and those early investors to hold shares that give them a lot more voting power compared to what's offered to the public. So the thing is, even if public shareholders collectively own, a large portion of the company's stock, their ability to influence the decisions made, even really big ones like electing board members or major corporate actions, it can be limited.
Wow, so they don't really have a say even though they own a lot of the company. That's kind of wild. Okay, so then the other potential challenge you brought up was the financial risk that comes along with operating at a net loss, and the fact that high growth comes with substantial costs. What should investors be paying close attention to with this?
I think the key here is that if a company is consistently operating at a net loss, they need to be able to access capital reliably in order to keep going and keep growing. Now, CoreWeave did just raise a pretty large sum of money through their IPO, which gives them some breathing room. But investors are going to want to see a really clear roadmap for how and when the company plans to become profitable. And they have to manage those high costs of growth very carefully to make sure it actually translates into lasting revenue increases and a more solid position in the market. If their growth were to slow down unexpectedly or their costs go up more than they thought, that could really put their financial stability at risk.
So it's a balancing act. All right, let's flip the script and talk about the advantages. You emphasize their specialized focus on high-performance GPU workloads. How does this give them a leg up on their competition?
Well, by focusing specifically on those computing tasks that are really dependent on GPUs, CoreWeave can customize its infrastructure and software in a way that the more general-purpose cloud providers can't. That specialization can lead to much better performance for these very specific tasks, lower latency, and potentially more cost-effective solutions for customers working in AI, machine learning, and those other high-performance computing fields. It's about being a leader in a specific, in-demand part of the market.
So they're kind of like the experts in their niche.
Yeah.
Okay, and then you mentioned the massive market opportunity within AI cloud infrastructure. It sounds like they're well-positioned in a sector that's poised for significant growth.
Yes, definitely. I mean, the AI market is only going to get bigger. It's projected to grow tremendously, and the infrastructure that underpins these advancements is critical. So CoreWeave is right there, ready to capitalize on that increasing need for specialized cloud computing resources.
Now let's talk about how the market feels about CoreWeave. The information you sent suggests that analysts and investors are definitely watching them closely because of their specialized services and this booming AI industry. But we don't have a lot of specific ratings or public opinions available yet. What do you make of that?
Well, to me, that says that the market is probably just taking a step back, observing and evaluating. The IPO was very recent, so investors are most likely waiting for more concrete information, especially those financial results from their first few quarters as a publicly traded company. That'll give them a better picture of their execution and overall financial health. I mean, the strong interest in the AI sector overall definitely creates a positive context, but investors really want to see tangible results before they start forming strong opinions.
So the wait-and-see approach. Okay, so when we look at their competitive position, CoreWeave is up against some big players like Amazon Web Services and Microsoft Azure. So even with their specialized approach, how do you see them navigating this very competitive landscape?
While they are competing with these huge cloud providers, they're also setting themselves apart with their specialization. AWS and Azure offer a huge range of services, where CoreWeave is laser-focused on this very specific and growing segment of the market. Those partnerships they have, like that one with Microsoft, where they're reportedly getting a big chunk of revenue from, could be both helpful and risky. It gives them access to already established customer bases, but also creates some dependence. They'll have to keep innovating in that high-performance GPU infrastructure if they want to maintain their advantage.
So staying ahead of the curve is essential. And lastly, let's consider the future outlook. We have those upcoming earnings reports to look forward to, continued growth in the AI and ML sectors. Those are potential positives. But then you have potential risks like changes in regulations, increasing competition in the market. What's your take on what we should be keeping our eyes on?
I think that raises a really crucial question about their long-term survival. Can CoreWeave keep up this rapid growth and boost their financial performance as competition gets even tougher? And you have to think about regulatory changes, things like data privacy and AI. Those could have an impact too. Investors need to track their revenue growth closely, how well they're managing expenses, their progress towards becoming profitable, and any new developments in the competitive landscape or those regulatory areas.
So there's a lot to watch. All right, to wrap it all up for everyone listening, for those of you who want to understand this quickly and fully, CoreWeave is a really interesting case study. They're operating in this rapidly growing AI cloud infrastructure market with a very specific, very focused approach. And we've learned that they have strong revenue growth, but they're currently operating at a net loss, which, as we discussed, is pretty common for tech companies that are all about that growth. We talked about some possible challenges like the three-tier share class system, which could potentially limit the influence of public shareholders, and the inherent financial risks that come along with fast growth and those ongoing operating losses. On the other hand, their specialized focus and the just enormous potential of the AI market, those are some big strengths working in their favor.
Definitely. The early stock performance after that IPO suggests a cautious but optimistic outlook from investors. It closed at its IPO price after some initial movement, and that tells us the market is probably just watching closely for now. So as you continue following this, keep your eye on those future earnings reports. You'll get a better sense of how healthy their financials really are and how well they're taking advantage of the market opportunities. It's also worth thinking about how their reliance on Microsoft for so much of their revenue and the fact that they're using NVIDIA's tech, how that might shape their journey moving forward.
It really does highlight a fascinating crossroads
Yeah.
where you have this very specialized technology and this huge market potential. And it brings up a really important question for all of us to ponder.
Yeah.
How do companies with such a specific focus navigate and compete in a market where those tech giants have such a huge presence? And then what does it mean for the long term to have that multi-class share structure? How does that impact the influence investors have in these new high-growth companies that have just gone public? It's definitely something to think about.
I really appreciate you bringing CoreWeave to our attention for this deep dive.
Yeah, absolutely. And to everyone listening, if you found this insightful and interesting, please subscribe, like, and leave us a comment. We are always on the lookout for new companies and ideas to unpack for you.
Always happy to be here.
All right. Until next time.
See you then.
Bye.